I think 60-ish seconds. Okay, quiet on set. Okay, we should be good to go. I'll just publish this in our channel so that everyone can see, starting soon. It's amazing how much it slows down. Oh, we're live. We're on. Fantastic. Okay, and it's working. It's just the two of us. Okay, let me move this window over here. Fantastic. So thank you very much, everyone. We're really happy to be here. Oh, damn it. I've lost. Sorry, technical difficulties. We're live. That part worked. Okay, welcome everyone. So Charles, we'll just wait until we have a few more people on the channel. Okay, Alpha Impact. Just publishing this. Okay, we have one viewer.
Woohoo!
Yeah.
It's okay. We'll get the views on the broadcast.
Yeah, it's funny. The Twitch live stream seems to be easier for people. It was just a easier interface. Everyone could just, I guess, quote unquote, ape in to that one. So we will. I'll just give the community a minute to join, and then we'll do our market update. Howard, what's your view on the markets? Charles, I know you've just placed some Dogecoin trades just while I'm doing this. What's your thesis? What are things looking like out there?
I mean, I think we're still gonna be sort of sideways, consolidation for another month or so, and then yeah, we'll see how things go. Really, I mean, I hate trying to call the markets, but yeah, my general thesis is that this is still the year when people wake up to crypto becoming mainstream, and so the sell-off of was it now 3 weeks ago now?
Yeah.
Was pretty was pretty painful, and I'm sure a lot of retail investors got burnt. But yeah, I mean it comes with the territory, it's crypto.
Yeah, absolutely. Fantastic. Okay, well, thank you everyone for joining. We're here. We're slowly creeping up our user numbers. Very excited to have you all here with us. I'm joined this evening by Charles, who is one of Alpha Impact's top traders. We're very excited to welcome Charles to the episode this evening. Before we do that, let's jump in. We got some announcements. We're going to do some market updates. I've got monitors on all sides of me, so if I'm looking at over here, that's the reason why. So let's just jump straight in. I'm going to share my screen. We are going to do the market update. Share screen. And for everyone who's watching, I'm a grandpa, and sharing screens has now become difficult. It was not difficult weeks ago. I guess that's part of the journey. So we are, okay, I'm sharing my screen. Fantastic. So let's take a look at the Bitcoin charts first and foremost. So we'll go to the daily. You'll see a whole lot of lines here. We'll just zoom in. So we obviously saw, starting not very long ago, that was April 14th. So we're going into, it looks like week 7 of this downtrend. We've seen a downward declining line, a decreasing trend line. More recently, actually, we've seen signs for support. So, or signs of positivity, so to speak. So let's, you can see the downtrend. It's pretty clear there. We have seen rising weekly support, and that was actually tested, and now we've bounced back. Let's take a look at the 3-hour 3-hour chart, just to take a look at where we are. So what we're going to do here, we're going to look at the downtrending line of support. Now, there was a wedge that we saw descending, and you could see here, very clear wedge pattern. The bottom of that wedge was tested right around the time we were going to do our token launch. We actually decided to hold off because we knew that there would be blood in the water. So what we're now looking is we've broken through this upwards, we've broken upward through the downward trending line. We want to see a few more candles printed outside this line before truly knowing that we are in the clear. But it's our expectation that in the near term, we're going to be going upwards. So we don't have enough information to make that call clearly today. However, the view here at Alpha Impact is that we are headed north again. Of course, it's not going to be a straight line. We think there's a reasonable chance we could go sideways. So that's Bitcoin. Let's take a look at Ethereum. The picture is similar there, I suppose. And I see that you're live. Good luck. Thank you. Our team is working hard to support me. So we're still in that wedge, it looks like, on the 3-hour chart for Ethereum. So we've got a few more people joining. For those that are just joining now, my name is Hayden. I'm the CEO, co-founder of Alpha Impact, joined by Charles, who's one of our top traders on the Alpha Impact platform. So this is the chart that we're looking at. We also have a couple more announcements, a couple more updates. So very excited to announce that we are now on CoinGecko. So you can see here, this is recently added coins. We are the, what is this? 1, 2, 3, 4, 5, 6. So we're in the top 10 in terms, look at all these coins that listed. I don't want to say shit coins, but we all know we're thinking it. So we're pretty close to the top in terms of volume. Very happy about that. Of course, price is always volatile in the early stages, but we're headed in the right direction. So look at that, 3.9 mil in volume. So feeling pretty positive. Let's head over to Twitter. Oh, sorry, Charles, go ahead.
No, that's it. Not too shabby in terms of volume.
Yeah, we're feeling good. We're feeling good. CoinMarketCap has listed us. We're there. We're on their Twitter. We've also got, oh, is it CoinGecko? We got that one as well. CoinMarketCap is there. So let's just take a look at the, you know, I always think that being on CoinMarketCap is a really good indication of progress. I'm just so happy to see this, and I want to give a big shout out to the tech team, of course, led by Austin and Chow Wen, the marketing team, both people on the team have been working hard, and of course to my fearless co-founder, Austin. So we're here, we're on Alpha Impact, we're number 2658, looking to go up from there, but and we're on 48 watch lists, so definitely we're doing well. Price over the last little while has been, we're moving up, so it's uptrending. We're very positive about this. We were watching this closely late last night in the office, and it's been a great ride since then. So feeling great. We're going to be turning off the screen share in just a moment. Let me see. We got a couple comments. Charles, I know you're eager to share your wisdom, but Philippe OO says, Hayden, my opinion, TGE already done. So you have to leave the market analysis at start, leave to the end or end them. Guys want to know about Alpha Impact. Keep the good work. All right. Thank you for the feedback. Much appreciated. So we're now back. We're live with Charles, one of our top traders. Now, it's something I wanted to share. You know, this takes us back maybe 6 or 7 months. And Austin and I were sitting in the office we had at that time, which was a co-working space. You know, there wasn't enough aircon. There weren't any whiteboards. The whiteboard markers were dry. It was a terrible cramped space with no windows. And, you know, this is the startup life. And we were thinking, what would be the most helpful thing that we could offer traders? And it would be, of course, in an uptrending market, we want to give access to the best traders to allow people to take risk. But what about the markets where it's going sideways or going down? And so in those markets, we actually don't want to be taking risk. We want to be taking measured risk. And so we know there's a lot of folks here who are wanting to take less risk, no risk, medium levels of risk. And so we thought, let's not just make this about return on investment. So our leaderboard is actually going to be able to feature traders. You'll be able to sort by drawdowns, volatility, and Sharpe ratio, which are really useful ways of finding traders who are not, let's just say, not the crazy risk takers. So we've got one of our amazing, loyal, enthusiastic traders here with us this evening. Charles, thank you for joining us.
Hey there, Hayden. Thanks for having me. So yeah, just quick 5 minutes about myself, I guess. Yeah, I definitely would not consider myself a crazy risk taker. Quite the opposite. I think I would call myself pretty conservative by all accounts. And my net long only exposure to crypto is fairly minimal. But yeah, we can get into that a little bit later. My background is in traditional finance. Spent almost a decade in London analyzing collective investments, investment trusts, and the like. Came back to Singapore for a couple of years. I have been back in Singapore for a couple of years now. Tried my hand at startups. And then yeah, about a year ago, just fell into the crypto community just by sheer accident, really. Was because of poker. Got to know a lot of good crypto people in the poker scene, and yeah, like we just had the conversation, I guess, about how crappy my fixed deposit returns in UOB were. Oh wait, am I not supposed to diss traditional banks on on live stream?
I think it's okay. I think it's okay. We don't have any. I don't think UOB is sponsoring this, so you can speak your mind.
So yeah, I think it was a bit of a joke where like yeah, I was really thrilled about getting 1.18% per annum on my fixed deposit. And I was like, yeah, I got that extra, 0.18 or something. And then like these guys were telling me about how like the risk-free rate on US dollars in crypto is a minimum of like 12%. And I was like, nah, fuck off, really. And I thought it was a joke at first, but then I did my research, and I put a little bit of capital to work, and decided after a couple of weeks that this was something worth pursuing in a little bit more detail. And then 10,000 became 100,000, and then I added another zero to that account at the start of this year. A couple of friends joined me and said, "Hey, can we have some of that action?" And yeah, I mean that's where I am today. I'm managing a little bit of my own capital, a little bit of my friends and family capital. And through Alpha Impact, I'm looking to sort of scale up this strategy even more, because it's definitely there's definitely a lot more capacity in terms of what I'm doing. But I mean, I've very quickly realized, of course, that it's increasingly burdensome to have to manage different friends and families' accounts individually, separately. And yeah, so I'm quite thrilled to be, I'm very much looking forward to when you guys launch your copy trading software, because that will just enable me to manage 500 accounts rather than 5 at the moment, which is what I'm doing.
Yeah, that's really exciting. And so there's something I wanted to hone in on there. You said something that that our viewers might not be clear on. You said the risk-free rate for crypto is 12%. Now, in the traditional world, when we hear risk-free, we think a government bond where I can choose from the best governments to the worst governments. We generally think of the U.S. government being the least risky place to lend money to. We could dispute that, but we'd probably run out of time. But when you say risk-free in crypto, how does that compare to what people might be thinking in terms of risk-free in terms of a government bond?
Yeah, so I mean, like in my mind, risk-free is basically whatever is. I mean, look, we don't have like the equivalent of a U.S. government security here, but I would consider like the USDT, USDC rate on Compound, for example, to be quite indicative of what is risk-free. I think you would get a very similar rate of return if you left your money with, say, for example, BlockFi or HoloNut or any one of the crypto lending solutions out there. So yeah, I mean, basically, if you don't want to spend a lot of time, trading, if you don't want to take on any transaction fee risk or any sort of work at all, then yeah, you just park your money in a protocol like Compound that's been running for a couple of years now. And I think you'll find that you'll get something to the order of 10-12% per annum fairly easily. And then yeah, for me it was really about, okay, 10-12% sounds very interesting, from a traditional finance point of view. And then as I was going down this rabbit hole, as we all have done in crypto, I'm sure. I was going, okay, so what if I take a little bit of risk, and what if I do a little bit of that, and what if I have to work a little bit for this yield? And up came basis trading, or some people might call it cash and carry arbitrage, where I was basically discovering that you could do 40-50% per annum, and if you apply a little bit of leverage, it starts to go into like triple digits, and that's when it becomes a little bit more interesting.
Right. Okay. And so you've talked a little bit about the risk-free rate. You've talked about doing this carry trade, putting on leverage. How do you manage? It sounds very complicated, and I know there's lots of people watching who, or at least 8 people watching, some of whom may be experts, some of whom are not. But let's just say, Alpha Impact allows me to copy you, and I'm greedy, and I don't just want 10%. I want the whole lot. How would you make money from me as a follower? And before you answer, I just want to clarify, we are not registered investment advisors. Everyone should do their own research before making investment decisions. Investing in cryptocurrencies is highly risky. Alpha Impact is not a licensed investment advisor. And of course, you should do your own research. But having said all of that long legal disclaimer stuff, how would I follow you, and or what would be the trade that I would be following you into? And how would you make me money? Because I want to pile on the risk, and I don't want to take tons of risk, but I want more than 10. I want more than 0% risk. So
yeah.
how would that work?
So if I just take a step back and sort of just go through my own personal journey. So for me, it was really about trying to find the kind of trade where, like, I'm happy to work from home. I'm happy to work. I don't need it to be a completely passive strategy, but at the same time, I've got a young family. I've got two young kids. I want to spend time with them. So it needed to be something that was not super high maintenance, And so when I discovered the basis trade, it struck me as being quite perfect, right? Because essentially what the core of the strategy is you're skimming. It's an arbitrage trade, which means that, which is defined as riskless profit. And the reason it's defined as such is because you're at all times delta neutral, which means that you're completely hedged against all the market movements. So just to use an example, I would, for example, buy 1 Bitcoin, and I would sell or short 1 Bitcoin futures contract. And so just to use an example, if Bitcoin was trading at, say, 35,000, and if the contract was trading at 36,000, if I bought the Bitcoin at 35 and I sold the futures contract at 36, I'm basically guaranteeing myself a $1,000 profit as long as I hold it until the end of the contract, and until the contract maturity. So it was a very straightforward trade for me, and there are risks, as with all things in life, and those revolve mainly around the exchange. The exchange can get hacked, for example. And there are other more technical things involved, especially, for example, if you pile on leverage, that does affect your returns as well. But by and large, I mean, it was a very, as I stated from the very beginning, it's a very low maintenance strategy, in where you essentially put on 2 positions. You have a long position and you have a short position, and no matter what happens with the market, whatever P&L you're making on one position is being offset almost perfectly by the other. And as you reach the end of the contract maturity, you basically cash in on that price difference. And so from a risk point of view, it struck me that it was probably the lowest risk trade you could possibly find in crypto, right? Because crypto is characterized by this insane level of volatility. And here sitting in front of me was something which, I mean, with a little bit of tweaking and a little bit of sort of, magic with a little bit of special sauce, I guess. You can amp up the returns to something, resembling 40% per annum. And for the kind of for the risk or lack thereof, it really struck me as being a very, very attractive trade because I mean, of course, we've all heard about friends who have made 20x, 30x on buying a token launch or something.
Dogecoin.
Or alpha impact tokens. But that comes with a massive amount of risk. I mean, like it can pump 30 times. It can also go to zero. And of course, I mean, from what I know, most people who invest in these, shall we call them shit coins, don't really put more than say 5,000, 10,000 in each of them, if even that much. For me, I mean, with the basis trade, I was quite happy to put 1 million on it simply because I could see that it was it really represented something that was very, very stable, very, very attractive from a risk reward point of view. And the reason that I did that was because I had been tested many times. So the example I used was I had a pretty big position going into Christmas last year, and I'm not sure if guys on the line remember, but I think it was Boxing Day. Just that Ripple was hit with that lawsuit from the from the SEC, I believe, right? And I think on that day, Ripple fell something like 40% in perhaps 2 hours or something like that. It was just a straight red candle wick down. And I logged into my account half expecting to be completely, wiped out or at least significantly dented in terms of my equity. And yeah, like to my surprise, I was like, oh, everything's fine. Like the theory works in practice. My spot position, because I was holding a whole bunch of XRP, was down 40%. But at the same time, because I had this short position on Ripple, that completely made up for any losses that I incurred on the spots. And so there I was, facing a 40% drop in the price of Ripple, but it didn't affect my portfolio one bit. And so it was really after that, that's what really convinced me to then just turn on the taps. And that's when I added another zero to the amount that I had invested in the basis trade.
Yeah, well, it's really interesting. So how do you go from, so how did you start? Let's take a step back from, obviously you've come into crypto as an adult. You're not you're not coming at this with $100 in your pocket, but how would you talk about crypto? Because we've talked a little bit about volatility, we've talked about risk. You're talking about investing quite large sums of money, but I mean, what a lot of our community and our followers are people who are just getting started, or I think the fundamental problem is people just don't have that knowledge, understanding. And so, one of our values as a company is to make this accessible, just as accessible to the person with $25 as to the person with $25 million. So I guess, what would be your, if you could go back to a point where you were a bit younger, maybe you had $1,000 just to play with. What would you say to yourself about investing if you could have that conversation with your younger self?
So I think if I sort of think back to when I was like 20 something and just starting out, obviously I coming from a traditional finance background, I just really believe in the power of compounding, right? So for me, it's just about if you can make 10% per annum and you can compound it at consistently at at that rate, then yeah, 20 years later you're sorted, right? And here we have something which is pretty far in excess of 10% per annum. I'm not sure how long it's going to last. Fair disclaimer. But for as long as it does, and for as long as this risk reward is very attractive, yeah, I definitely be parking my capital in a trade like this. Now, that said, I mean, if you just had $25 or $100 in your pocket, this might not, basis trading might not be for you, simply because it's probably not going to move the needle very much. But for the members of the audience out there who may have already made some decent change from having bought Bitcoin or Ethereum early, or if you've had a good run thanks to DeFi summer, then I would say, and this is me being very conservative, like an old conservative grandpa again, but it might be an idea to take some money off the table and park it into something a little bit more of a high yield, but very, I wouldn't say low risk, but very well understood risk strategy, like basis trading, and indeed that's what quite a few of my friends, quite a few of these poker buddies that of mine in crypto have been doing over the past couple of months. They've been taking money off the table, and they've been putting it into yield farming strategies or yield producing strategies like basis trading among them.
Yeah. Okay. And so I wanted to talk a little bit about one of the finer points, which is that the strategy that you're referring to. Well, can you talk a little bit about futures? And because we're talking about this basis trade as if everyone knows. The part of what you're talking about is spot, which I think most people understand, and part of it is futures. Can you talk a bit about just what is a future? What does it represent? How do futures work compared to just, because I think most people understand, if I buy Bitcoin, I've got some Bitcoin. If I buy Dogecoin, I've got some Dogecoin. But what are futures and how do they fit into this?
Sure. I mean, so a futures contract is basically it's just a promissory note, essentially, right? It's a contract between two people, two counterparties, and both of whom want to take opposing views on the direction of travel of a particular asset, or more accurately, its price. So if you sort of think back to how like futures got started and were invented, it's, think about like your corn farmer in Iowa or something, right? And he's got to make he's got a whole bunch of liabilities and payments in about 3 months when he gets the harvest, but he wants to lock in the price. He doesn't want to expose himself to that volatility. So he'll go to the futures market and say, I've got to sell, I don't know, like 5,000. I'm not sure what the units are. 5,000 bushels of corn worth of corn futures, and there'll be some other guy on the other end, maybe a corn syrup manufacturer or something, right? And he's going to be buying 5,000 bushels worth of that corn futures contract as well. So it started off that way. And then, of course, somewhere along the line, some smart ass said, hey, we don't just have to do real stuff. We can just do it on anything. It's essentially I mean, I hesitate to call it a casino, but it's basically two people saying, I'm betting on it going up, and the other guy saying, I'm betting on it going down, and there we go. So that's essentially what a futures contract is, and so by holding both the spot and the short futures contract, you're essentially saying that I've got this asset that's gonna go up in value by $1 if the price goes up by $1, and then I've got this other instrument. So it's not an asset, but it's a financial instrument that's going to go down by $1 if the price goes up by $1. And so because they cancel out each other almost perfectly, and by definition, they will have to cancel out each other perfectly at the expiry at the expiry of that contract. Yeah, that's where you have this sort of basis trade opportunity arising. Now, the reason you even have these opportunities is really because crypto is still a very inefficient market. It's still very
Agree.
new.
Agree.
And so like the only reason these things exist in crypto but not in traditional finance is because in traditional finance you've got trillions of dollars worth of hedge fund money, institutional money, high frequency trading algorithms, and
Bill
just
Huang is out there somewhere. Used to, I mean, I don't know what he's doing now, but he represented a lot of that, right?
yeah. So I mean, you've got all these really really smart guys with like dedicated cable laid into the exchange just so they can trade 5 microseconds faster than you. um, and yeah, like you've got all this like super amped up infrastructure, and that's why like these arbitrages don't exist in traditional finance, right? um, if you look at crypto, I mean, just in terms of the market cap alone, it's just a fraction of what there is out there in the traditional markets. And of course, what's really driving these discrepancies and therefore these arbitrage opportunities is the fact that you've got a lot more retail investors coupled with far fewer institutional investors and a lot less institutional money, simply because I think for for a lot of institutions, and I felt the pain of this myself because I did try to set up a basis trading fund quite recently, and let me tell you, it's just very difficult to convince regulated entities that
Oh man.
that
Yep.
you can put money into crypto and it's going to be safe. So because of that, you have this huge shortage of institutional money coming in to make the markets efficient, whereas you've got this wave of retail money that's basically pushing these huge discrepancies between the futures price and the actual spot price. And
Got it.
and yeah, and that's basically where where we are.
Okay. And so what you've described is that, and by the way, guys, we've got a couple questions starting to come in. Throw your questions in the box here on the. I know we've just switched from Twitch to YouTube. It's an adjustment for me. I know it's an adjustment for you guys, but throw your questions in the chat and we'll get to them shortly. So Charles, the condition that you've just described is that basically the market is inefficient in a sense that the spot price of what the price today of Bitcoin is whatever it is. I think we're at, I don't know, 37,000 something. There is a futures price that is higher than that. That means that the expectation of the market right now is that a Bitcoin in the future is worth more than a Bitcoin today in the present. But if more institutional money comes in, the gap between those two will narrow, right? Because it's just a more efficient allocation of capital and you won't have such a scarcity. So could the inverse happen where the future expectation is that well, I know the answer is yes to this question, but could what we call backwardation, where the futures price is lower than the current spot price, could that happen? And can you take us through how that would affect trading in general, and then maybe more specifically your trade?
Yeah, absolutely. So you're absolutely right. The futures price is something that's set by the market. There's no law that says it has to be higher than the spot. And so I mean, it is rare, but there are times, such as I think even today, where the market does go into backwardation, and that's a phenomenon where the futures price falls below the spot. Now, I say that's rare because essentially, you're saying that there is no cost of carry, which means that if I wanted to buy an asset, in the future, what usually happens is that there is a cost involved with having with holding a particular asset. So say, for example, if I was talking about corn, like I would have to actually store the corn and insure the corn and before delivering it upon maturity. And so futures tend to trade in what's called contango, or rather, the futures tend to trade at premium to spot, simply because there are these costs involved. And so by the law of the market, if you're not compensating me for these costs, I'm not selling, or rather, I'm not transacting. With Bitcoin, yeah. So I mean, it's not that you have all these physical costs involved, but rather if it's trading at a discount to the spot, you're yeah, A, it's a sign that the market is bearish, but B, if that's the case, then you're saying that the cost of money is basically negative, and that's quite unusual, So if Bitcoin is going to be lowered 3 months from now, if I can buy Bitcoin cheaper 3 months from now, then what I'm gonna do is sure, like I'll just buy that contract. Let's say I had Bitcoin today, right? And let's say it's trading at 37,000, but the futures contract is trading at 36. Now, that's very strange, because what it means to me is, hey, I know what I'll do. I'll just buy that futures contract to buy Bitcoin at 36,000, which is less than what it is today in the market. I'll sell my Bitcoin today at 37,000, put that 37,000 in a crypto lending solution and make, I don't know, 10% per annum or something like that, and then come back in 3 months' time and buy that Bitcoin back at 36,000. So I've just made free money, if that's the case. So the basis trade works in regardless of whether we're in contango or backwardation. The only proviso really is that there needs to be a large enough difference to actually make it worthwhile. So the basis trade doesn't work when markets are efficient. If there isn't a huge dislocation either way, either if there's no huge premium or huge discount, then the basis trade doesn't really work. But I don't think we'll have to worry too much about that for some time to come, because from what I can see, I think crypto as an industry is likely to remain in a state of inefficiency for quite some time yet.
Sure. So Charles, you mentioned something very interesting. You said that the market went into contango today. I saw a research note from JP Morgan saying the same thing. I'm looking at the chart and I want to just pull this up.
You mean?
Sorry, backwardation. When did that happen exactly? Because I'm looking at it and I don't see it.
So I don't know which price feed you use, but
Are you talking about maybe the September?
I don't use CME. I'm just looking at FTX and the contract. That's what I'm on. And the contract on FTX was slightly negative for the June delivery.
Oh, June. Okay, hold on. Let me just. So for those of us, for those in the audience, bear with us. We're just pulling up something we want to show you. BTC, it's 0625. Okay, let's take a look.
Oh, but it's jumped back to a premium now.
Oh. Yeah. Oh, wow. It's very tight.
It's jumped back to a premium. But wow, Ethereum is now at, well, it's basically trading at par. So from what I can see, Ethereum June for settlement on 25th of June is trading at a 0.02% premium, which is close enough to, I guess.
You would, yeah, but you would expect okay, let's, you know what, I want to put this on the screens. So just give us a second, everyone. We're going to blow this up.
I think it did dip below 0 briefly, and then it's just jumped back up because we've had a bit of a run.
Okay. So we're sharing the screen now. Charles, can you see the screen that I'm sharing, or can you just see me?
I can see the. Yeah. I
okay.
See the screen. Sure.
Now I've lost my mouse. This is like, I'm such a grandpa now. It's so funny. Run a tech company and you'll become an old man overnight, I guarantee. Okay, so what we're looking at here is the June 25th. Now, you would expect the June 25th futures to trade pretty close to par, right? Because we're talking about something that's happening, what, 15 days away. So this is, I mean, let's zoom in a little bit, 15 minutes. So we're straddling the line, and I could see what you mean here. This is just, we've spent a little bit of this it's just a few hours ago, actually. We're spending a little bit of time as the price is going up, which is ironic, below the line. So can you explain to the viewers what that means?
Yeah, so it just means that for that hour or so, provided you were able to capture that opportunity, you might have been able to buy the Bitcoin June 2021 futures at a price that's lower than what Bitcoin was trading on in the spot market. And yeah, like I said, it's quite fleeting because the natural state of the market shouldn't be shouldn't be a discount to spot for the reasons that we've already discussed. But yeah, I mean, there are obviously times when that does happen, and where the discount becomes significant, and where it does persist. And of course, that's when you have a sort of quote unquote crypto winter, where sentiment is so bearish that people just are as a whole just betting that prices will continue to slide, and that's why they're shorting the futures en masse and pushing the price of the futures below what it's trading on in the spot market.
Got it. So just for everyone who's watching in the audience, what we're looking at here is these candles that we're seeing. Those are the price of the June 25th futures. This blue line right here, that is the current market price. So we would expect in a market that is as inefficient as crypto, that these lines would always appear above the blue line. Let's take a look at the December one. And then Charles, after this, what we're gonna do is go to some questions from the audience. So BTC 1231. So this is the December 31 futures. Now, I think the viewers will be able to see pretty clearly the shape of the line. See, this is a much different curve. So Charles, what's explaining this? How would you explain this to perhaps someone who's new to the markets? Yeah, I mean, so, firstly, what are we seeing? What is the difference?
Yeah, so as you can see, the sort of the red and green candlesticks, that's basically the Bitcoin December futures price, and then in the blue line is the spot. So Bitcoin's trading at just below 38,000 on the spot market, but it's trading just below 40,000 in terms of the December futures. So essentially, what the market's telling you is that if you wanted to, you could, using this very simple basis trading strategy, buy one Bitcoin for 38,000 and sell exactly one Bitcoin futures December futures contract for just around 40,000, for example, and you're basically locking in a $2,000 profit as long as you hold it till the end of December when the contract settles.
Got it. Okay, so we're going to go to some questions. I'm going to give you, Charles, the question that's coming, and then I'll take a couple questions that are here for me. So the question that's coming is from Flipjar, great name. Hey, I want to ask our guest what he thinks about technical analysis versus speculation. What's working best for him? So Charles, I'll give you a moment to think about that. We've got a couple of, actually it looks like we've got two questions for me. So I'll take those questions and then I'll come back to ask you technical analysis versus speculation, what's working best for you. So I'll now go to our two questions. So Ingar's Lassus, any courses for beginners? I'm proper ape here. Well, I think Ingar's great question. This in our minds is slight course for beginners. Of course, the difference will be when we're actually up and running, you'll be able to follow Charles, and we have a little gift to give Charles at the end. So stay tuned. We're launching soon. Really excited to share the details. Vex go live. Any plans for Impact to be traded on BSC or PancakeSwap? Yes, we're exploring both of those, and we have we do have one announcement to make. So we are exploring cross-chain options. So of course, we're excited to deploy a cross-chain solution on Cardano when that's up and running. But what I did want to say is that we're launching yield farming. So we're going to be announcing the official details tomorrow. But let me just write a quick. We are announcing yield farming. So here's the information I have. The registration period will be at some point in the next, let's say, week. It'll start next week. Our official staking partner is Ferrum. Customers will be able to, by the way, in GARS, when we talk about aping, yield farming is a great way to ape. So our partners Ferrum will be having a page on our website where customers can quote unquote ape in and add liquidity. And it's really important to have liquidity that's added to support the alpha impact community. So everyone that adds liquidity is actually adding directly to our community by contributing liquidity to our pool and helping helping the next person, basically. So that's a really important part of our mission to democratize finance. Now, the partner that we're using for this has said, you should put a minimum on your customers and you should only allow people who have a lot of liquidity to put liquidity in the pool. And we said to them, no, that's not what we're going to do. Our mission is to democratize finance for everyone, whether they have $25 or 25 BTC. So the minimum, I'm happy to say, for the yield farming contributions, or LP rewards, as we sometimes call it, will be $25. That means that if you have $25 worth of tokens and $25 worth of Ethereum, you can add liquidity to the pool. The APY, we're not going to tell you yet. That's going to be announced soon. And we're going to be putting out details on our website and on Medium tomorrow. So feel free to stay tuned. So quick plug out of the way, Charles. We've got this question. Technical analysis versus speculation. What is working best for you?
So if I'm honest, neither. So, like as I've just described, or I'm not sure when the audience member joined the call, but we started off this call, this sort of broadcast by where I introduced myself as possibly like the most conservative, most boring investor in crypto, really. And the reason is quite simple, because the strategy which I run provides a very decent, very attractive rate of return without having to take too much unknown, unquantifiable risk. And so, yeah, I don't use technical analysis simply because the basis trade doesn't require it. It's at its very core, like I said, it's about buying one asset, going long, and selling one asset or going short, and having both of these just hedge out one another in terms of price movements. And all you're really doing is just capturing this difference. It's crazy but true that you could buy a Bitcoin today at 38,000 and sell it for 40,000 in December, and you're guaranteeing yourself a $2,000 profit on a $38,000 investment, which is a pretty good rate of return. You apply a little bit of leverage to that, and all of a sudden, like 10%, I think, yeah, that's about 10% annualized return. If you apply a little bit of leverage to that, you can boost it 2-3x, and it becomes 20 or 30%, for example. Yeah, because of that, I don't use technical analysis. I do analyze to find what I believe are the best opportunities, risk reward wise, but technical analysis doesn't feature in that. Speculation, yeah, I've got some shit coins. I'll be honest. And my philosophy on that is really that using the quote unquote free money that I'm getting from this basis trade, I then have the courage, I guess, to use that free money to then speculate on a bunch of shitcoins. And so for me, what's working is really I put the vast majority of my net worth and my accumulated wealth into the basis trade, which I believe is a very attractive risk reward strategy. And then using this income that just gets churned out every day, every week, every month, I then use that to speculate in coins where friends such as Hayden and other people in the industry. If it's good enough for them, it's good enough for me. And so like I have to admit I probably don't do as much research as I should, but I rely on people whom I know are far more intelligent and perhaps far more clued in than I am in the crypto industry for so-called stock tips.
Yeah, and it's very interesting, right? Because your model means that you're half long and half short. So if the price goes down 50%, the price goes up 50%, you're actually in a very safe position because you're not affected by those price movements. So I guess you're not doing research because you're negligent or reckless. You're actually not doing research because you don't have to, because the trade that you're in that you've mastered so clearly doesn't require you to be in the know. You're basically long short, you're 50-50. So it's very interesting. Charles, we have a couple minutes left. I want to ask the audience if there's any questions for Charles or for me. Just put your questions in. Charles, and we'll choose maybe one more question to ask our guest. Charles, we do have an honor to bestow upon you. We're just opening up beta testing next week. So customers who are adding liquidity and yield farming are going to be invited to join our platform. They'll be the first users on the platform. But today we have a very low number of usernames that have been given out. Do you have a username you'd like to reserve with us on the call here? We will make sure no one else takes that username.
Yeah, could you just reserve Basis Trader?
Basis Trader. Okay, Basis Trader.
There we go.
All right, we got Basis Trader. Yep. Hope our tech team is watching. Although I guess we'll just talk in the office. They're not relying on the YouTube. But Basis Trader is now taken. So whoever's out there, you are. I'm sorry to say you're not going to get it. We've got a question from Viverne. Thanks, Charles. Are you worried about counterparty risk? This is a great question because let me say the nightmare scenario is that you're trading with an exchange. You're running this basis trade. So your market risk is actually close to zero because you're half long, half short. But what if the exchange goes belly up and goes out of business? This has happened, and those of us living in Singapore are no doubt aware of the torque incident that happened a few months ago. So there will be people in the general population that are thinking, well, I'm not sure I want to trust an exchange with my funds. And hey, we always say this in crypto, not your keys, not your crypto. So you are taking actually quite a lot of risk on what we call the counterparty in this transaction. So talk us through your thinking on this.
Yeah, fair enough. And it's something which I was very worried about as well before I started putting substantial amounts of money into this trade. My take on that is that I mean you mentioned torque, and I just want to take a second to sort of address that. So torque, I think it's something that I would have avoided from the very get-go. It's not something which it wasn't even really an exchange in my mind. It was sort of like an investment scheme, and it wasn't regulated, it wasn't licensed, and it wasn't big. It didn't have the sort of hallmarks of what I would consider trustworthy. So my sort of general rule of thumb is that I stick with the exchanges which are in like the top 5. I don't want to diss any of the exchanges, so but even within the top 5, I would say that there are some which I would avoid simply because recent actions or actually actions that may have happened a couple of years ago basically indicate or would hint to users that perhaps you're not the highest priority on their list. I would just like to give a quick shout out to FTX. I love the platform. I'm a huge fan, and it's the one platform where where I concentrate most of my risk, really, and I'll be quite honest with that. I mean, if you want to know more about my whole thought process, I'm sure we can sort of drop a sort of DM link somewhere later on. But in essence, just to wrap things up, because I'm conscious that we're short of time. FTX to me is the exchange that in its very short in its very short existence so far, because I mean, I have to pinch myself to realize that it's only been around for just over 2 years. But yeah, like in its very short existence, they've done, I would say, everything right. Where people have been what's called auto deleveraged, for example. They've made things right. When the huge market crashed, when the market crashed 3 weeks ago on the 19th of May, and some other exchanges had these huge candle wicks below $30,000 on Bitcoin, and outages across the board, and people weren't able to put through trades. FTX was up and running throughout the entire event. So I would be very conscious. I am very conscious of counterparty risk, and of course, yeah, I think it's something which we have to be very conscious of, given that the trade that we're doing doesn't have market risk, but it has the element of counterparty risk. And so for me, it's really just about do your own research, make sure you're very comfortable with the counterparty that you are transacting with. And in my case, I'm more than happy to endorse FTX as my chosen exchange.
Yeah, and look, I want to echo what you've said. The only place so the alternative for a lot of folks will be to go through one of the banks, or CME has futures, DBS has something. Anything that comes from a bank in crypto tends to mean you get terrible prices and you get ripped off. I'm sorry to say, that's just how it is.
Yep.
In a market that has been designed to be free from politics and interference, it's challenging, I think, for me to accept as a consumer that I need to pay terrible spreads or some crazy amount of fees. So I also want to voice my support for FTX. I've been in crypto since 2017. I know Sam. I know other members of the management team and the C-suite in FTX. I've been to the office in Hong Kong. I've spent time every different level of the company, and I don't know the whole team. There's lots of them now, but I've watched them grow. I've spent time with them, and look, they haven't done a lot of the crazy things that other exchanges have done. And again, I'm not going to say which exchanges, but I think we're both aware of which ones in the top 5, in just about every list. And the other thing I could say is that there are a number of exchanges that fake their volumes, and FTX doesn't appear to do that either. We're getting dozens of inbound requests to list on these exchanges you've never heard from that claim to have billions of dollars of volume every day. But you go on their LinkedIn, they have like 2 employees. You go to their website, it's not complete. It's got copyright 2017 on it. So there are a lot of exchanges out there who fake it. FTX doesn't. So I think I'm with you on that. Guys, I think we're running short on time. So thank you very much, Mario, Vevern, Vexglove, Ingars, Flipjar, Pierre, Philippe, and everyone else who's joined us. Really grateful to have you. Charles, are there any traders you think we should interview in our next session? Who would you be interested to watch us interview next?
I think you should be interviewing Austin.
Oh, okay.
He's a bona fide trader. I mean, I know he's your co-founder, but so there's a little bit of conflict of interest, I guess. But yeah, I don't know. I mean, like, I think quick question back to you then, Hayden. I mean, like, would you and Austin have trader profiles on Alpha Impact?
Yeah, and the problem that I have with this, Charles, about, I've been very accessible to the community. I'm always very honest. I've not done any trading in over a month because I've been so damn busy with this business. So I've been watching my profile and I'm not doing well. I'm a little bit, I don't know if it's a vanity thing or an ego thing. I'm a little bit ashamed because I know Austin's doing very well. I've been quite open about my username on the platform, Dangerous Dave. My portfolio there's been some danger, I'll just say. it has not been managed the way that I'd like to manage it. But if you want to dedicate lots of time to crypto trading, don't start a crypto company and do a token, because it tends to be very distracting. But we will, yeah, absolutely. Both Austin and myself will be traders on the platform. So the goal for us is to, over the next coming months, try to interview traders. So we've heard, and thank you very much, Charles, for joining us this evening. We've heard the low market risk version of the strategy of Charles, the basis trader. He is the official basis trader. No one will be getting that username ever again, we're sorry to say. Charles, thank you very much for joining us. Really glad to have you here. And until next time, we'll talk to you soon.
Cool. Cheers. Take care.
Great. Thanks, everyone. And remember, don't just trade crypto.